I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. U.S. ethanol production was steady last week but held well above year-ago levels as crush margins continued to incentivize processing. The latest data from the Energy Information Administration showed that ethanol production averaged 1.12 million barrels a day last week. Output was also 10.7% above the same week last year. The stable output runs counter to the typical seasonal slowdown, suggesting producers have yet to begin spring maintenance and are instead taking advantage of strong margin. Data from Iowa State University's Center for Agricultural and Rural Development showed that daily returns over operating costs improved to 53 cents per gallon in April. Relatively cheaper corn and natural gas prices ahead of the conflict with Iran contributed those strong margins. Strong growth in U.S. ethanol exports has been a positive for grain demand, and despite record production, corn use for ethanol may struggle to reach a record due to growth in sorghum use as a biofuel feedstock. U.S. biomass-based diesel production rose sharply last month, likely driving higher soybean oil usage. Monthly data from the Environmental Protection Agency showed that combined production of renewable diesel and biodiesel totaled 374 million gallons in March. That was up about 33% year over year and the highest monthly volume since the December 2024 record. The recovery in biomass diesel production comes as the EPA released its final renewable volume obligations for 2026 and 2027 at the end of March. Higher biofuel production should help combat soybean oil inventories, which have been rising over the past few months until March. The latest report from the National Oilseed Processors Association showed that soybean oil had the highest monthly disappearance on record last month, likely due to the sharp jump in biomass diesel production. Strong demand for soybean oil and soybean meal should continue to support domestic soybean crushings, which have been running at a record this season. U.S. cattle prices stomped to new records again on both the cash and futures side of things. June live cattle futures traded as high as $252 per hundredweight on Tuesday, a contract high and an all-time high on the continuous chart. That was also the first time that fat cattle traded above $250. Futures were also pushed higher, led by the cash market and a recovery in the stock market. On the cash side, the 5-area weighted index hit a new record of $248.38 per hundredweight last week, according to the USDA. Cattle prices hitting new highs comes as the cattle market heads into its primary demand season. Packers have been bidding up for cattle even with tight margins that slipped negative again this past week. Federally inspected cattle slaughter totaled 512,000 head last week, down 4% from the previous week and 10% lower than a year ago. Cattle slaughter is estimated to have fallen to about 2.2 million head in March, down from 2.5 million a year earlier, based on data from the U.S. Department of Agriculture. Despite tighter supply and higher prices, demand remains steady. Choice box beef prices traded at about $320 per hundredweight this week, nearly $60 lower than their August high of $380. However, prices have been trading at a record seasonally. Those strong wholesale prices are reflected at the retail level as consumer demand drives record prices. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.